I want to go now to Washington. In some Washington news, we've been talking about the fate of President Biden's social spending package, but lawmakers also up against the clock now as to the deadline to raise the U.S. debt limit or face potential defaults. It's all quickly approaching, and Elon Moore joins us with a look at what investors should know right now. Good morning.
Well, good morning, Andrew. It is impossible to predict exactly when Treasury will hit the debt limit and no longer be able to pay the nation's bills. Treasury's best guess is that we're good through December the 15th, but the real answer is based on a complicated accounting of extraordinary measures, cash on hand, bills that are due, and money that's coming in from taxpayers. So we created a debt limit tracker. The Bipartisan Policy Center crunched the numbers to help give us a daily estimate of where we stand. Now, for now, we are in the green. Treasury has about $325 billion left. It started with $580 billion after Congress raised the debt limit last month. But we are closing in on the yellow zone, which begins at about $300 billion and is roughly enough money to last for 2 weeks. The red zone is the danger zone, anything below $100 billion, and that's where we had gotten when Congress finally acted last time. Now, clearly, the dial will move forward as Treasury spends money. BPC projects some of the bills due just this week are $10 billion to the SBA, another $10 billion in Medicaid payments to states, $9 billion to defense contractors. But the dial can also move back into the green if a lot of money rolls in, like big end-of-the-year tax payments. And that is why the Bipartisan Policy Center estimates that the actual X date is anywhere from mid-December to early February. So, guys, this tracker can help investors and lawmakers really try to narrow down that moving target. Back over to you.
Elon, in terms of just walk through this, because we've got to layer on this other big bill, which obviously is causing all sorts of debate and tumult in Washington, and what the interplay of that looks like related to this, frankly, maybe related even, we were talking about how interconnected the decision about Jay Powell and Lael Brainerd may very well be to all of this.
Yeah, absolutely. You bring up a good point, Andrew, because one interesting thing was that Treasury really was not able to set that December 15th timeline for when they want Congress to raise the debt limit until the infrastructure bill was passed and signed into law. And that is because there was a significant payment that Treasury would then have to make to the Highway Trust Fund that really impacted its sort of daily cash flow. So that is a very good example of the way that when legislation is actually signed, it can have an impact on when Treasury could hit the debt limit. Well, as far as the social spending package, what we know is that that is actually paid out over time. And so we are not expecting to see that signed into law until likely after that December 15th timeframe that Treasury wants to see action from Congress. We do know that Majority Leader Chuck Schumer and Minority Leader Mitch McConnell, they have already met to start talking about the path forward on the debt limit. And that is important because it's something that didn't happen the last time we had this sort of round of brinksmanship. They are starting that conversation for how to find a compromise to address this issue that everyone knows is going to happen. Whether or not they're actually able to come up with a solution remains to be seen, but at least they're talking to each other, and that's the first step.